Hello, this is Josh Kahr at The Real Angle, and today I'm speaking with Grant Reaves, Managing Director and co-founder of Stoic Real Estate Partners. And we're going to talk about industrial. Grant, how are you doing today?
I'm doing great. Thank you for having me today.
Great, thanks for joining. We get to talk about industrial, which is a subject that is near and dear to my heart. I was on the board of a public REIT that owned industrial for around 5 or 6 years. So it's a subject I really enjoy chatting about. So this is good.
Sure.
Um, cool. So let's get into it. So let's start with the basics. Your co-founder, managing director of
hmm
Stoic. Where are you based?
So I'm in South Alabama, so near Mobile, on the Alabama Gulf Coast. So the kind of that weird part of Alabama that comes down and touches the ocean. Well, that's where we are. So we're about 30, 45 minutes from Florida, about 30, 45 minutes from Mississippi. So right in between.
Cool.
But yeah, it's a good place. Grew up in Georgia and relocated down here after college. But yeah, we've enjoyed it. We invest primarily throughout the Southeast, but we are based here in South Alabama.
What markets in the Southeast are you currently in, and what markets, I guess, would you like to be in?
So we own assets in Jackson, Mississippi Metro. We do own some stuff in Pensacola, Florida, stuff in Mobile area, Little Rock, Arkansas, Atlanta, Georgia, MSA. Trying to think. I think that that's most of the areas where we are. We would like to be in more markets that we have something under contract in Tallahassee, Florida. We also have
Hmm.
something under contract in Northwest Arkansas, which is a very exciting market up there in like the Bentonville Rogers area that's doing really
Got it.
well. We've also chased a lot of stuff over in Louisiana. So Baton Rouge, Slidell, New Orleans, some areas like that as well. But we primarily stay in kind of the more stabilized secondary markets. So more of the Birminghams versus the Nashvilles. We don't love those kind of high growth markets. It's just they do really well. It's just kind of a different return structure. We
Sure.
kind of like to see some in place yield, or an easy place to be able to get to yield rather than buying a negatively leveraged five cap and hoping that somebody else will pay a negatively
And then
leveraged five
grow
cap
into
and
it.
five. Exactly,
Yeah.
exactly. So it makes it a lot easier for us to
I
kind
hear
of
you.
move by higher. Yeah.
I mean, I was just gonna say, I mean, I'm based in northern New Jersey, and cap rates here
hmm
just don't make any sense. They
Yeah.
just don't.
Exactly.
And
Yeah.
as I've been saying to people, is that cap rates are local, but interest rates are national. So you get into
hmm
these places where you're like, okay, how do I buy it at a five cap if I'm borrowing money at 6.5? You don't.
Yeah.
It's just a really strange market to be in right now.
It
Um,
is, but it's also really hot. Like it's also just like really active in the markets we play in, at least in the southeast. I mean, it's not. We never see anything that's like, hey, we're going to offer these people, 40% less than what they're asking. It's like if you're going to buy it, you're going to buy it from near where they're asking because somebody will.
That's interesting. It's interesting.
Yeah.
Yeah, no, it's all fascinating stuff. It's all fascinating stuff. So
It
you're
is.
doing multi-tenant industrial, flex, so to speak. So when
Mm-hmm.
you define that for me a little bit, what do you
Yeah.
mean when you say flex?
Yeah, so we're buying office warehouse complexes. So our typical buy box is 50,000 to 150,000 square feet in one or multiple buildings in a complex that are made up of office warehouse suites that are say 2 to 7,000 square feet in size,
Okay,
and those will have varying uh, parts of office. So like you might have a 4,000 square foot suite that has 2,000 square feet of office, so it's more like 50-50. And you might have a 10,000 square foot suite that has 1,000 square feet of office, so like 10% office. So it's flexible. That's why they call it flex. So
sure.
you have a lot of different users. We have a lot of like home services businesses, some pharmaceutical, life science kind of space, which is kind of odd. A lot of general contractors, elevator companies, Terminex. Um, Icy is a tenant at like three complexes for some reason, like the
Which
drinks
tenant? I'm sorry.
Icy,
Nice.
Icy, like the slushy
Oh, the
machines.
slushy people. Okay, yeah,
Yeah.
yeah, yeah, yeah. Sure, sure, sure,
I
sure.
don't know why we
Yeah.
just keep seeing them over and over.
That is, I did not. No, I knew what you meant by icy. I then was trying to figure out if that was some acronym for something that I did not
No,
know. But
it
no, you
is
meant the
the
slushy people.
stronger
Okay,
than yeah.
okay, cool, cool. I like
Yeah.
them. That's good.
Yeah,
That
it's a good one.
you know,
But yeah, then we also have some more like kind of lab space stuff. Like Tyson Foods is a like chicken. Tyson Chicken is a tenant
sure,
of ours in Mississippi, and they do like food safety testing. So like their chicken packaging and stuff. So
got it.
like you walk into their warehouse and it's all like pretty much a lab space built in within the warehouse. It's kind of
Sure,
interesting.
checking for bacterial contamination and all
Yeah,
that
of
kind of
course.
stuff. Yeah,
Yeah,
yeah, yeah. No, it's interesting. I always enjoy industrial because it's kind of almost like going backstage at a theater.
yeah,
It's all the stuff that you don't see when you're just staring at the actors. There's a
Yeah,
lot of
exactly.
other stuff that goes on in this country that most people have no idea is even happening because
Yeah,
we
and it's
just run
always
our
kind of like
mouth.
odd, different uses for it. I mean, it's just kind of
Sure.
funny. Like we have another tenant that does it's more pharmaceutical, but they essentially put together like all the prescription packets and everything for all the nursing homes throughout the state, and
Okay.
they do all the logistics and shipping and receiving out of this flex industrial space. So like their warehouse again is kind of lab space, but every night they have tons of vans that come in, super secure. They have security everywhere because they deal with a lot of narcotics and that
You're
kind of thing.
handling all the
And
painkillers. Yeah. Yeah.
yeah, exactly. And so they're shipping them throughout the entire state. So every morning at like 1 a.m. or something crazy like that, they're shipping out of the facility. It's interesting.
It's funny. Before we got started, we very briefly talked about, podcasts. And
Yeah.
there's a podcast I'm really enjoying right now, which is a podcast dedicated only to armored car heists. And it's like just all these armored car heists. And I'm on like episode 4 or 5 of it. And the
Yeah.
main conclusion I have is that all these guys operate out of space, like exactly like what you're describing.
Exactly.
It's like just some generic building in an industrial park, and that's where the armored car people go.
Quick story about that. It's really funny. So that facility, obviously, because of what they're dealing is like very secure. You have to sign in. They're really weird whenever you want to do a site tour. They're really weird about it. They have
Sure, no, they're
like
considered.
yeah, it makes sense. Well, we're
Yeah,
doing our site tour on this facility. Our leasing agent, leasing agent at the time, he was like an assistant. It was like his second week as a commercial real estate broker. Was showing us around, and he just had the key ring from the management company. And he just unlocked a door. We ended up walking into like the most secure lab space that they have, and they just turned around like, "Who are you guys?" It was really funny.
No, they're very concerned. Yeah.
Yeah,
That
they
makes
were very.
people
So they're like,
very
"How'd you get
nervous
in
very
here?"
quickly. Yeah.
We're like, "We're just real estate guys, just looking at
Just
buildings," and
do, do, do,
it
do,
was really
do.
funny.
I know. No, it's I years ago I was in a facility. It was a cash handling facility for
Mhm.
Chase Manhattan Bank, and it was the room that
Mhm.
they had in Lower Manhattan where all the bags of money came in for, I guess, like tagging it, like to put the bills and the thing with the little wrappers on
Yeah,
them. And they had like the room just was nothing but cameras. It was the most amazing. There was no money in it at the time, but the security of
I'm sure it's crazy.
filming the people who handling obscene amounts of money. So I
Exactly.
I love stuff like that. I love stuff like that.
It's cool.
So now, before you started Stoic, you were working as a leasing broker, right?
No, investment sales broker. So I
Investment
worked
sales.
in,
Okay.
hospitality brokerage primarily. So,
Oh,
like Hampton Inns, Holiday Inn Expresses, sold to owner operators as well as funds, PE shops like us
sure.
now, REITs even.
So
So
how'd
we
you
sold
go
stuff. Yeah.
from investment sales for hospitality to owning industrial? I would
Yeah,
the most natural jump would have been, I think, owning hospitality. So how did that
exactly.
happen?
So that was the original plan. So I've been
Okay.
in brokerage. I got out of college, I guess, 2013, and so this was around. It was 2019 is really when I decided I wanted to get onto the principal side. So I was late 20s at the time and looking to figure out how I was going to make that jump, start raising some money, and so I started chasing hospitality deals and trying to put those together, and that's really where I started reading tons of books and watching endless amounts of hours of setting up a private equity real estate company and how that looks, and so through that, I was chasing hotels, and then COVID happened, and so I was like, I'm not going to buy a hotel through COVID. That there was so many distressed players coming through out
Sure.
into the woodwork to buy those, and it just didn't make sense. So where we are, you had housing just go crazy in 2020 through COVID. It was already blowing up down here, but like right now, I think our MSA is like the seventh fastest growing MSA in the country in
Hmm.
South Alabama of all places. And so, if you're not focused on housing, the closest thing that we could find to that was storage. And so we ended up in self storage space in 21.
Okay.
Did a few deals there, and then really started seeing that asset class get priced out for us. I mean, people can make it work. It's long term. I think the fundamentals are there, but for us, we couldn't make those cap rates work and those deals pencil. So we'd always liked the idea of flex industrial. Jeremy, my business partner, had done some more kind of regional brokerage work rather than he did a lot of triple net retail. Like Dollar General kind of sales as well, but he did some kind of more localized stuff and saw that there was no flex space available and there was so much demand for it. And so we started talking to other brokers around the Southeast, and we're kind of seeing that same story in all these markets. And so early 22, we decided we wanted to start chasing flex. We didn't buy anything until I guess September of that year. So it wasn't like a whim that we're like, hey, let's go buy this, see how that works. We spent a lot
Sure.
of time really figuring it out. But it's been a great asset class. I mean, it's undersupplied in the markets we play in. and demand continues to grow as the populations grow, as there's more and more service businesses moving in. And pretty much or really in every market we play in, the rents do not support new construction. So, like for instance, in the Jackson, Mississippi metro, rents are say $9 to $11 a square foot triple net.
Right.
You'd have to be 15, 16 to justify a new build, and so you have a long delta there to be able to continue to push rents.
Right. And yeah, and that's important for people to understand, is that if you're that below the cost of construction,
Mm-hmm.
and even if there was new product built at a higher rent, it's not competing with you because it would be Class A brand new stuff, whereas you're
And actually, kind of would help us because of the fact that like was a rising tide lifts all ships
yeah,
or
yeah,
whatever.
yeah,
Like
yeah, sure.
if somebody builds next to us and they're at $16 and we're next door at 10, then we can go to 13 and still be way less than they are.
You're
But
still
we
the
just
low
increased
cost
our rents
alternative.
30%.
Right,
Exactly.
right, right, right. Now, from a
Yeah.
management standpoint, I mean, a lot of this stuff, you're not dealing with triple net lease credit. Like when I was on the board of that REIT I mentioned, like we were like half FedEx. With
Yeah.
your stuff, there's more management involved, obviously.
Mhm.
Are you do your own management? You have local property management people making sure the lawn gets cut? How's that work?
So we have in-house asset management and in-house accounting team, but we do outsource the actual third-party property management. So
Okay.
depending on the market, we'll use. It kind of depends. Like one of the national guys is usually the strongest in whatever market. So like whether that's a Colliers, Cushman Way, an NAI affiliate, somebody like that, and that's usually who will have do our leasing. That's usually who brought us the deal first off. So they get to sell it to us, then they get the management, the leasing, and then they'll sell it when we're done with it.
Got it.
So it's a good relationship. But we've kind of found that in these smaller markets, there's one or two people that really focus on flex. So that's who we work with. So we have the on-site third-party property managers local in the market. And then, again, we have in-house asset and accounting teams overseeing those third-party managers.
Got it. Got it. And that
Yeah.
and that makes sense. That makes sense. And then you're running everything. Now, I'm always curious in this, just because I myself own a co-working business. Are you running stuff out of your house? How have you guys professionalized this, or have you?
As far as our company goes,
Yeah, 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 yeah. I'm just curious.
no, we're a very in-office group. So we're here
Okay.
standard office hours, and everyone
Cool.
is on site.
Traditional. Okay, that's cool.
Yeah, we're
That's cool.
traditional. Yeah.
No, it's funny with this. I mean, because I do feel it's interesting to me how many real estate companies are doing some sort of hybrid type model
Hmm.
now. And it's like the old joke about the cobbler's kids having no shoes or something. Like,
Exactly.
if real estate people don't believe in being an office space, well, then who does? Like,
Yeah, I
it's
talked
like,
to a fund one time that they were like an office fund, but they all work from home, and I was like, I don't feel like that works. Like y'all got to be in office if
yeah, it's
you're
like a
especially an
chef.
office fund.
It's like a chef who doesn't eat the food. You're like, what do
Exactly.
you know that I don't? It's
Exactly. Barbecue
it's
master
concerning.
that's a vegan or something.
Yeah, exactly. That would concern me. That would concern
Yeah,
me.
exactly. Not what you want.
Yeah. No, it's
Uh,
it's interesting with this stuff. So let's talk about sort of industrial a little bit more, and then I want to understand more about kind of your business and your trajectory. So, like,
yeah.
what do you see for industrial in the coming year, 3 years, 5 years? What trends are you seeing in industrial?
So as far as our little subset, we're seeing just
Sure.
more and more demand come in. We are starting to see new builds come in, which I think is going into some of the larger markets. Like this week on LinkedIn, for instance, I've seen two or three new construction deals get announced in like Austin, Texas, or in Atlanta Metro, or stuff like that. And so that's kind
Sure.
of what we want to see happen. So our whole thesis is we're going to buy a few million square feet of multi-tenant flex industrial, continue to push rents. We believe that someone will start building the product, which will really be able to push up the rents at that point. And that'll probably be in 5 to 10 years from now. We really feel like that will be kind of the time to start selling assets and then potentially start building assets. We would love to build flex if we can find markets that will support it. And as rents continue to rise, we feel like we'll get there. But right now, it just makes a lot more sense to buy it in place. But we're really bullish on the space. I mean, there's just not any vacancy of it. I mean, in
Yeah.
McDonough, Georgia, we bought a deal. It was 90,000 square feet. The CoStar report, which I get as CoStar, but still take it with a grain of salt. It's
It's still
like a
data.
1%
Yeah.
vacancy. Yeah, still data. There's 1% vacancy there. Their in place rents were $3 a square foot net. Market's 12, and we're renewing tenants at 12. They're paying 4 times what they were paying before because of the fact that there's nowhere to go. So it's like it's not predatory. It's just hey, this is the market,
That's
and so
market.
you
Now,
can
I mean,
either
look,
yeah.
industrial by definition, it's funny, when you talk about things like apartments,
Hmm.
apartments are a different world in terms of like, pushing families and what have you. But with industrial,
Yeah.
it's just math.
It's just math. Yeah.
Yeah.
And it
No,
just comes down to the fact that if you're in a business, like say you're an HVAC company and you have an office warehouse, business or suite, and someone rolls you to market, it's like you can either go out of business or you can pay the rate here, or you can pay a bunch of money to move and pay the same rate. So stay here, pay the rate.
right, and that's that. That's that. Now, in most of what you guys have been doing, you're buying cash flow, which is great, and it's positive
Mm-hmm.
leverage, and it's fantastic. Are these more for you? I know you have a fund that I guess I'm going to guess here. At the beginning, you didn't have a fund. Now you do have a
Mm-hmm.
fund, right? So,
Yes, that's true.
are you like doing value add strategy? Is this just
Mm-hmm.
simply buy, hold, push rents? Like what
Yeah,
strategy
so
do you
every
use?
deal is obviously a little bit different, and they're different varying degrees of value add, but they're all value add. But
They're all
some are
value.
more stabilized. There are some that are negatively leveraged when we buy it, like that one in McDonough, Georgia. I mean, the rents were $3-4 a square foot, so I think our going in cap rate was, I don't know, 5, and our debt's
Sure.
8.5, but the yield on cost is 14, year 2, year 3. So there are those kind of heavier lift deals. But then on the flip side, like we bought a 158,000 square foot portfolio in Mississippi that bought it from a REIT, good tilt wall, nice construction, 7.6 cap, got 580 debt from a life co on it. So that one's a little bit, there's definitely room to push rents, but that one's a little bit more stabilized. So those are kind of the two different sides. And to your point, we did start off in the syndication world. So we started off doing deal by deal.
Sure.
Last year, we started our fund, SCP Industrial Holdings 1, aiming to raise $25 million in equity. We have just over $7 million in that vehicle right now. And
Cool.
so on the first 3 assets of that fund, what we've done is kind of interesting. We have some larger either fund of funds or family offices that like to be direct investors but write larger checks. And so what we've done is kind of like, for instance, that McDonough, I just keep going back to McDonough because it's a good example, but we have a fund of funds that brought in $800,000 in equity, and then our fund brought in $1.2 million in equity to make up the whole
Hmm.
equity stack on that, and they just invest pari passu,
Got it.
side by side. Yeah.
Got it. Got
So
it.
it's a good
Yeah.
model for everybody.
Well, the good thing is, I mean, because you're still relatively small in terms of asset count,
Mm-hmm.
like you can do custom stuff. Whereas
Yeah.
if you were a bigger PE shop, you just have your machine, and that would be the end of the conversation. You know.
Exactly. So
Yeah.
hopefully one day we're that cool, but right now it's
No, no,
we're
but
not in a position. Yeah.
right, you're not in a
I get paid.
position.
Yeah,
It's still
yeah.
money. You're not turning
If
it
someone would
down.
like to invest with us, we will figure out how to make it work.
Yeah,
It's
no,
one of
it's
those.
it's always it's always interesting, and the definition of a lot of money varies widely based on who you talk to.
Yeah, exactly.
I have a friend of mine who's a writer talking about
Hmm.
a conversation that he had with another gentleman, where the other gentleman was complaining about how much money he got for his latest writing project, and the difference was the other guy complaining was a Hollywood script writer, and like
Yeah,
when you like there's like writing little touching books about people's lives that no one reads, and then there's like Hollywood scriptwriter. Like,
yeah. There's
there's
different varying degrees. It's relative, right?
yeah, it's all
So
relative.
yeah,
It's all relative.
yeah.
The Hollywood guy was complaining about how little he got, and it's like 5 times more than my buddy's ever made in his life. So,
Yeah, that
what do
happened
you
to me
do?
one time. I had a broker when we were doing storage when we first started.
Sure.
There's some guys that had what I would consider a small self storage deal. So we were doing 50 to 100,000 square foot storage deals. He had like I guess like a 15 or 20,000 square foot deal. It was an interesting location, so I was like, I'll get the details. So I called and left him a message and said, "Hey, I'm calling about your little self storage deal that you just listed in blah blah blah, Florida." He called me right back, and I was like, "How are you doing today?" He's like, "Well, I was doing a lot better before you called my self storage deal small."
Small, exactly,
It's all
exactly.
relative, right?
Exactly. No, I have kids, and I laugh about just because they're tiny people does not mean they have tiny feelings. Like their
Exactly.
feelings are equally as valid. They're just
Exactly.
smaller than you.
100%.
That's the only difference.
Yeah.
It's it's
Uh,
it's fair enough. No, it's good to remain humble as we go through life. Um,
for sure.
so you started this with a partner, right?
Hmm.
Okay, so
Yep.
you
So
guys
Jeremy
work
Friedman is
together,
my partner. Yeah.
and you guys work together doing investment sales, or kind of what was the
Yeah.
connection there?
So, quick backstory on Jeremy, and I'm sure I'll get some of these deal points wrong, but overall, he's older than I am, so I'm 32. He just turned 50 actually, so we have a bit of age gap there. But he started off in investment banking in the bond business in Memphis, Tennessee, and
Got
was
it.
an institutional bond broker.
Okay.
Moved down to South Alabama to get into the real estate world and was a home builder. Started in 2006, so that timing was amazing. ended up in commercial real estate brokerage through the recession, and so that's when we got together. So I guess in 2013, in my first job, he was working there selling mainly triple net retail, and I came in as a 21-year-old going to sling some hotels, and
Hey.
we became friends there.
Yeah, no, you find your people, and that doesn't mean
Yeah,
they're exactly your age. It is interesting. I
exactly.
mean, no, I have one of my favorite people in the world is a former student of mine, and
Mm-hmm.
he was a student of mine like 15, 20 years ago, and
Yeah,
we still talk shop just because he was my student
fun.
doesn't mean I don't value his opinion. It's
100%. Yeah. No, and
so
Jeremy have a really good relationship, and we have good good different kind of styles of how we look at things and how we deal with our employees and all that kind of stuff. And so it's a good mix. I feel like it's really been a good experience.
so you got Fund One up and going, which is good.
Mm-hmm.
Fund One is still early life, so
Yep.
which, as you said, so other than obviously raising more money for Fund One, is the
Mm-hmm.
vision once Fund One is done doing Fund Two? Do you want to go a different strategy? What's been your experience in the fund world, if you will,
Yeah, it's
versus
interesting for
syndication and
sure.
stuff?
Yeah, I mean, the interesting thing is obviously the grass always looks greener. If you're in a fundraise, you're like, man, if we were just syndicating, that'd be so much easier. But then when you're
Mm,
syndicating, you're like, if we just had a fund. So there's good and bad to both. Moving forward, I think we'll continue to do like Fund Two will probably still be like kind of a co-invest fund, really. Like that kind of strategy has come out. Our investors like it because it allows us to be able to build a lot larger portfolio, or manage a much larger portfolio by bringing in kind of these JV checks alongside the fund to be able to buy more assets. So currently, as I sit here, I think that's what we'll do moving forward is kind of use more retail investors or somebody that wants to invest 50 to 200 or somewhere in that range. That's
sure.
probably more of a fund investor to be able to get them some diversification, and then bring in direct check writers of 500 to 2 million or 3 million, whatever that number may be, to go buy deals and kind of marry those up together.
Got it. Got it.
Yeah,
And then just wash, rinse, repeat, get bigger, and what have you. Yeah.
exactly. Like our first fund's a 5-year closed-ended fund. That's probably what we'll continue to do. We like the idea of an evergreen structure, whether that's private REIT or if that's just a general, just evergreen fund.
Just the family
But
office who
obviously,
says, I just want to hold for cash flow and be done with it. Yeah.
yeah, or even making one where you have yearly liquidity, right? Like, and just kind of an ever evolving fund that you're raising. Those are interesting products. Obviously, a little bit more complex. You have to mark your book to market, and you got to be able to have your NAVs. And it's a lot different of a deal. So we need to get a little bit bigger. I mean, right now we own. I guess we've bought $90 million worth of assets. We'll buy another. We have, I guess, 15, 20 under contract. And we'll buy another 30. So we'll be at like 140, 150. I mean, when we get to 250, 300, then we can kind of start having those conversations. But right
No,
now,
it's
let's continue what we're doing.
and that's the normal path. And that's the
Yeah,
normal path.
exactly.
It is interesting watching sort of the way people evolve from like friends and family to syndication to work with some family offices to Fund One to evergreen fund to eventually public REIT. And that's sort of
Yeah,
the
that's
structural
the plan,
bumps.
right?
That's the
You keep
plan.
going up, yeah.
No, and it is
Because that's
funny.
really
I
what the
mean,
game is. You figured out your real estate niche really well, and you know exactly what you're looking for, how you do it, why you do it, and then the game kind of decides like how much equity can you put to work. That's really what becomes the big thing, right?
no, that's a good way of thinking of it. It's definitely trying not to overthink
Hmm.
the life cycle of the firm. Yeah.
Yeah,
No, it's so let's talk about some fun stuff. I always like to ask people a few questions. One of which
yeah.
is secret sauce. Like, what are you guys doing that you think other people aren't doing? Like, or why do you think a seller says, "I'm going to do a deal with these guys" rather than the other four people looking at the property?
Yeah, I think a big part of that. So we went through kind of, we had a marketing team come in. So we're a small group. So we have like 6 or 7 employees, including Jeremy and myself. But we had a marketing group come in. They were like helping us kind of like define our brand and that kind of thing. And
Sure.
everybody at that meeting, they asked, what makes Stoic unique? And everyone's answer was that we just kind of figure things out. Like I feel like a lot of deals that people look at and are like, that's too complicated. I don't want to deal with that. And maybe we're just glutton for punishment, but we're like, we'll figure that out. We'll go. And so
Right.
we bought deals that, seller wanted to subdivide off a cell tower, and it took 6 months, but it's a great deal. And so we'll work with that seller for 6 months to figure that out. So I think that is a strength of ours. Coming from the brokerage world, when you're a broker, you will do anything to figure out how to make a deal work and make it a good deal. And
Yeah.
so
Nothing
maybe that's where
actually
that
ever,
comes from.
right? I mean, you just find a way to
Yeah,
keep it. Yeah.
keep it pushing. Yeah. Yeah, just every deal's a good deal. Most deals are good deals as long as you can structure them right and pay the right price. So it's just figuring out what that number is and how to get there, right?
No, and that's fair enough. That's fair enough. Um, any surprises you've had now that you're on the other side and hung up your broker license, so to speak? What's that
Yeah,
like?
I mean, it is funny, as a broker, your whole thing is you're trying to convince somebody that it's a really good deal, so they should buy it. As a fund manager or syndicator, you're doing the same thing. It's just to an investor and to you rather than just directly to the deal, right? Like you're still convincing someone, or not convincing someone, but like showing someone why it's a good deal. Still,
You're always
it's
selling.
very similar.
You're
Yeah,
always
you're
showing the
selling the same
sailing.
thing.
Yeah, right.
Yeah, it's kind of like there's an old book, I think it's called The 1 Minute Salesman. It goes into like everyone's a salesman. If you're a doctor, you're selling your services. If you're a lawyer, like everyone's selling. It's kind of the same thing. You always think it's like world's different, but just instead of having hotel buyers, I have passive investors. It's still kind of the same thing.
Yeah, it is interesting though. I mean, it's always fascinating to me how people, based on kind of what their professional backgrounds are, kind of how they bring that to the table. Like, yeah, I
Hmm.
think if you've worked as a broker, you're never going to give that skill set up, nor should you.
Yeah,
I mean, it's a very valuable skill set. It's explaining
I
to
will
people
say
things.
one good difference of it is when you're a broker, you are like really selling something, right? Like you're really like, this is why you should do it. This is what you like.
Sure,
As
sure.
an investment manager, it's a little bit more. It is selling, but it's also a little bit more just like, here's the deal. Here's why we think it's awesome. Would you like to do it or not? Like I'm not gonna. It's your money. Like I'm not gonna
I can't
pressure
force you.
anybody.
Yeah, yeah, yeah,
Yeah, I can't
yeah,
force you. It's just like I'm gonna show you what we're doing. If you like it, great. If not, no big deal. Maybe you'll like the next
yeah.
one.
Let me
It's a
find the
little bit
people who are
less. Yeah,
find the people who are the fit for your vision rather than
exactly.
yeah, yeah, yeah.
Rather than like shoving it down everyone's throat. Like that's not the
No,
right game. Yeah.
no, no. And it's good to talk about these things. It's good to talk about these
Yeah.
things. So, I mean, we talked a little bit about the evolution of things. We talked about markets you're in. I'm trying to think what else we needed to hit. We've covered a lot of it. Any goofy
Yeah.
stories you feel like sharing? Odd things that
What
have
do we
gone
have?
sideways, good or bad surprises?
Yeah. I have one funny story. So we're in the self
Shoot.
storage business, right? So our first asset we bought, it was an old grocery store. We converted it into climate controlled self storage, and we had just opened it up. It was the first operation that we really had going, and at the time it was just me, Jeremy, and my now analyst Sam had just joined us right out of college, and so one day we started checking the cameras and just some weird stuff going on. And I was like, those people I think are living in the units, like,
Okay.
and
Okay.
so started
Sure.
seeing people come in and out, and like it was just I don't know drug related. I don't know what was going on, but anyway, a lot of people coming and going, weird times of night. I was like, someone's living in a unit. So
Sure.
Sam, we're all sitting at that time. We all had just had one big room that we sat together, and so Sam was like, "What's her name?" And so we Googled it real fast and found her Instagram, and she was like taking selfies and all this stuff in our storage unit, like at the time we are trying to figure out. I was like, "Yep, she's living there." So stuff like
There
that.
you
It's
go.
always fun.
There we go.
Yeah,
Now,
that was
Instagram
funny.
has doomed many people at this point. It's amazing to
Exactly.
me. I mean, I'm a bit older than you. I'm
Hmm.
50, and in
Yeah.
days of yore, when you did things that were a bad idea, as long as you and your friends agreed it never happened. There was no
Yeah.
photographic evidence. There was no documentation of whatever stupid thing you got yourself into.
Exactly.
Now I
Exactly.
don't
It's a lot
understand.
different.
I don't understand how anyone gets away with anything today. Everything's
I know, right?
documented. We're just
Yeah.
snitching on each other all the time. It's very strange.
Yeah.
It's very strange.
Yeah. It's definitely different than it used to be.
Well, this has been good to talk about sort of the growth of a firm.
Hmm.
I guess my last question would be just from an equity raising standpoint. So you've got Fund One, you're doing your thing. How are you finding investors? Because I mean, one thing I find interesting, and here's where I'm coming at this from this. Like you mentioned LinkedIn in passing. It's amazing how many people are on LinkedIn or Facebook or Instagram, and they all have some variation of give me money. It's like
Hmm.
very hard sell, very aggressive. I
Yeah.
can't imagine any of that stuff works, frankly, because I can't imagine it does. So how are you
Yeah.
finding people? How are people finding you who
Yeah.
want to
So
invest?
we have done some like more advertising, I would say, like through social media channels. So not like hard selling kind of stuff, but more so just like general advertising. We're
Sure.
we're trying to go more into just a I would say a marketing kind of place. Like doing podcasts like this is a great way of doing things,
Getting your
right?
name out there.
Or yeah, and just also like putting out blog videos, explaining deal stories, why we do things, just putting content out there and showing people like this is what we do. It's kind of going back to the sales thing we are talking about, right? Like just putting out here's what we do. If this resonates with you, we'd love to talk to you. You know, that kind of thing. But just making sure that we're out there, because that is a big difference now. I feel like with the internet, that in a small town in Alabama, we can still raise tens of millions of dollars through the internet, which is amazing, and be able to find other people. But yeah, it's really just putting out a lot of content is really our main thing, and then obviously referrals from current investors are
Existing
your
people.
most solid time. Yeah, and so making
No,
sure that you're cultivating those relationships.
yeah, the phrase social selling, it's,
Yeah,
which to me also just sounds like just good business. Like,
yeah.
get the word out about what you do,
hmm
meet people,
It's really
shake
simple.
hands.
Yeah, just meet
Yeah,
people, shake hands, and just if make sure that you're online. If someone's looking to invest in Flex Industrial, make sure that your stuff comes up. It's not that difficult, right?
right, 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 right. It's the same
Yeah,
old thing. No, I am guilty sometimes of overthinking the problem, and
yeah,
often it is keep it simple, stupid type approach is often
exactly. We
best.
do the same thing because we live so in the weeds with this real estate deal. So like you can really overcomplicate stuff really fast, but then you step back and it's like it does not have to be that hard.
Well, and it's also funny to me, and one more comment is that when we're talking about being in smaller markets,
hmm
it's funny to me because I've taught at Columbia for years, and we got students. Half my students are foreign nationals because it's Columbia.
Yeah,
You get people from all over the place, and you talk to someone about a small market in the United States, and then you realize, oh, wait a moment, you're from a small country.
yeah.
Like our idea of small for America is bigger than a number of small countries. So
Yeah, like the
it's
state of Alabama has a population of a lot of small countries.
right. So
It's funny.
so
Yeah,
so like, do you really like, you don't see anyone in Ireland saying, well, I'm only in a country of 7 million. I have to invest in other countries. I just can't find anything. It's like, well, it's a
yeah,
country. Like you should be able to find something in a place the size of a country. So
yeah.
just
It'll be there, right?
just logic. Well, anyway,
Yeah,
well, look, this has been good talking about sort of the life cycle of a firm. It's also always good
yeah,
to talk about flex industrial, which I've always found to be a fascinating asset class. Um, and this has been a pleasure.
yeah.
Grant,
Really
thank
appreciate
you,
it.
thank you for your time. And if anyone has any questions, one thing I always like to put out there, their web address is the word stoicep.com. So that's stoicep.com, and you can check out information about their fund. They've got contact info. Apparently,
Yep.
you've got your analyst Sam's email address up there, all kinds of good stuff.
Somewhere, yeah. And my email address will be on the contact page as well. Yeah, love contact me if you want to talk about some flex.
Thanks again, Grant. Much appreciated.
Thanks, Josh. Enjoyed it.